Most buyers think the biggest question when buying a house is, can I afford the payment? But that's only one piece of the puzzle. This week, we're looking at 3 common situations where buyers think they can afford a house until reality shows up. Well, happy Wednesday, everyone, and welcome to the Mojo Show, your real estate podcast where we talk about everything real estate. I'm your host, Joe Mortgage.
And I'm Cup of Joe Mortgage.
This week's episode, we're discussing one of the most important questions home buyers should ask, and that is, can you actually afford that house? We're going to go through 3 different real world scenarios that many buyers like you and I discuss some common mistakes along the way that can actually turn a very exciting purchase into a stressful one. But of course, before we get to all of that, a little coffee talk with the Joes.
All right. I got you today, Joe. I got you today.
You're scaring me.
I'm hoping I don't bring tears to your eyes because we're going in to July, and I'm skipping forward, but I feel like June's already halfway over. I feel like everything is flying.
Only June 10th.
Huh?
It's only the 10th of June.
I understand this, but next Friday is, the 18th. So
Okay.
in one, I feel like the time is sped up so much because my daughter is my last one in the house.
Mm-hmm.
She's going to be a senior.
Oh boy.
And I need time to stop.
Good luck.
So where is she?
What you got?
So my daughter hates this picture, but I love it.
Okay. Oh my.
That's what I remember. That's what I see
Were
every
you
time.
the Santa Claus in that?
No, I was not the Santa Claus in
Okay.
that.
All right.
But that's what I see.
Yeah.
And I still have on my board over here, when she moved and I was still here with Hunter, love you, Dad, even from Nebraska.
Oh, wow.
So these little things are like making me emotional because she's going to be in college next year.
Mm-hmm.
How did you deal with that last year? And did that year go by so fast that it like just hurt you? Because that's what it feels like already to me.
Really?
Yes.
It did go by fast. And that last year, especially with girls, with a daughter, it's expensive. It is expensive, no doubt about it. And my daughter is home from college this summer, and she's just in the other room, so she can probably hear me talking about her, right? But so don't be surprised if she comes storming in and tries to, make her
Take
own
over the show.
Yeah, kind of thing, But it's as a father, you definitely go through a roller coaster of emotions during that last year. Yes.
I mean, I had Hunter graduate, right? And then it was like, all right.
It's no big deal.
I was excited for him, but he was the first. And I was like, I still have my daughter.
Yeah.
So I was like, I've got time and all that, but that time is gone now. And I'm like, wait a second, what happened? So I would love to hear from our audience. If you're listening right now and you are dealing with, the older we get, you start dealing with these life changes and kids leaving. And I saw a reel of, the hardest thing for a dad is to do is raise a child so they don't need you. But you need them. And it's driving me nuts right now going into the senior year. So I'm trying to think of everything I can do to have every moment with her.
Absolutely.
But she's 17 and there's only so
be
much
with her friends
with Dad. So,
yeah. She wants to be with her friends and go do all the senior stuff. Okay.
Yeah.
So you're put on the back burner
and all that stuff. So I just wanted to, make sure it wasn't just me
No, it's not.
that gets emotional.
All of us dads. Yes.
Okay.
Yes.
Okay.
And that's, I think that's why when Samantha comes home during the summer, I enjoy it so much. I mean, I get 3 months of having her here, and being able to still be dad, 'cause at this point, it's not very often that I get to be dad
Right.
with both of my kids grown, right? So anytime that I do get to be dad, yeah, I cherish it. I remember, we're running out of time already with coffee talk, but sorry, you brought it up. So,
I did. I knew this was going to take some time.
it hits home for both of us, I think. And it might've been, boy, when was it? 6 months ago, back during, winter break, I think it was, that, she was driving home, and on I-45, just south of Houston, car broke down, tire, right? And it took me like a 2.5 hour drive to get to her. Side of the highway, changing the tire and all that. I was giddy to be able to, right? Because I got to, be able to be dad, and I don't get those opportunities much anymore. So over the next year, take advantage of it as much as you can, Joe.
I love that, and I will have to. So I know we have a great show today, but I would love to, if anybody's listening, or if you listen to this later, because I think we might have one right now that's actually paying attention to us. Put in the comments just how you handled the senior year of your last child to become an empty nester, right?
Yeah.
I would love to see some comments, something special maybe you did that is a memory, because I need ideas of things that will be lasting memories for us other than what dad likes to do.
Yeah.
So, but let's get into today's show, because the way that you said this in the beginning and your video was right on. Can you actually afford that house?
Yep. And we've got 3 scenarios that we picked out that commonly happen. So as we go through these 3 scenarios, one of them probably, you listeners out there, it's probably happened to you, or maybe it's happening to you right now, right? One of these 3. And if it is, drop it in the comments, because we'd love to chat, further about this to help you out, so that this doesn't become a stressful, transaction purchase for you, because buying a home should be a great event, so to speak. So what we'll do is we'll start out with each one of these, just kind of give you, our listeners, a prelude to this, is that we'll start out by giving you the scenario, right, of the home, of what we're talking about, and then we'll break it down for you, right? So the first scenario I want to discuss, one that commonly happens, is the payment shock type house, right? So here's the scenario. A buyer is tooling around on the internet, right? On these websites like Zillow, Har, and so on, right?
If we keep saying the names of these websites, we want some sponsorships coming through too. So if you work for any of these companies and you see this, we're giving plugs for Zillow and Realtor.com and UWM, Matt Ishbia. We go to yours a lot and put it in there and see what that is. So
so let's say they find a house, it really attracted to them, just by the pictures. It's $350,000 home. And sure enough, on that website, they scroll down a little bit and there's a mortgage calculator that they go through and estimate their monthly payment. Let's say it ends up being around $2,100. They look at that and they get so excited, because it's like, wow, I mean, that's basically what we're paying in rent, right? They get excited. And so, man, honey, let's, this weekend, let's go look at some houses and stuff, right? Thinking that payment is going to be their payment. Then reality kind of sets in, right? Because it's not just, and I'll say it right up front, so we can just attack the elephant in the room. Those calculators that you see on those websites, people, please pay no attention to them. They're going to be very deceiving, making you think that this is going to be your monthly payment, and it's not, right? Because they don't calculate in properly. That is, they don't calculate in the property taxes appropriately, what the homeowner's insurance might be in that area, because it's going to be different down here in Houston, in different areas of Houston even, than it would be up in Nebraska where you are, right?
Yep.
Or in Dallas area, because down here, depending upon what area you're in, the some insurance companies won't even insure homes down in, by the Bay Area and stuff,
We're
right?
seeing that up here too, especially in the corridors where you get a lot of the heavy thunderstorms, the hail and stuff like that.
Mhm.
And I was talking with an insurance buddy, just real quick,
Yeah.
talking with an insurance buddy that what he is finding in the Denton County area is that they have too many policies. So what their insurance company is doing is raising the premiums to slow more clients from that county.
Mhm.
So a lot of the things what you're talking about here on this calculator, that information is not known.
Yeah, it doesn't factor them in. It doesn't. And as well, there may be with that home that you fell in love with, there could be an HOA fee,
Oh.
right? It could be something simple like, $30 a month. It could be over $100 a month,
Yep.
right? So those things need to be factored in. You could be in an area that requires flood insurance. So now with all of these different items, your $2,100 a month suddenly becomes $3,000 or more.
Yeah.
Right?
And if you're renting today, you're probably paying, for a house, you're probably paying around 2,000 for, depending on the area. So you've got these other factors that come in there that you're looking at this calculator, and some calculators only give you the principal and interest. So Joe's bringing up great points here of, you don't know if there's HOI that is correct. Property taxes, you're depending on whoever the real estate agent was that entered it into MLS on a couple of the websites. So you don't know if that's correct or not.
Right.
And I have seen some of these, and I've talked to clients where they're like, oh, we saw on blah, 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 that the payment's only going to be this. And they didn't actually click and do their numbers for the down payment.
Right.
And they didn't realize that is giving you an estimate with a 20% down payment. Well,
right.
They only have 3% to put down. There's a big difference. 17%, that's a big difference.
It is. And not only that, but it changes depending upon your down payment. It's going to change what your interest rate is. And the interest rate that they're advertising is probably coming with a few points on it. And do you even qualify for that interest rate? Right. So I know I'm
you're going a different route now.
I am sorry.
A couple of things when you guys are looking to see what can we afford. Making sure if you're using these calculators, which I'm not going to down all the calculators. There are some really good ones out there, but don't just look at the estimate that they give you. Go in and actually change the numbers. Change it to the purchase price is already listed. So you know what that is. Change that down payment to what you want, not to totally come out of pocket because you have closing costs that are involved.
Sure.
Put in there, if it's 5%, put 5%. That way you can at least see, okay, hey, now that takes this house from a $2,100 payment to a $2,700 payment. And, that way you can get a better calculation on what's going on, and you can figure out before you go look at that house if it's something for you. But the bigger part of this is when you talk to Joe and I, we're going to tell you what that payment would be based on your pre-approval, and we're pulling taxes or we're pulling the area. We're seeing if there's that mud tax like you talked about up here. There's PIDs, more than anything. And what those are, so everybody knows, is it's more what the developer did with the city to add to helping them offset costs for the utilities and everything else that the lines had to be run. So a lot of that comes into play in that payment too. But like you said, HOA, nobody on a calculator sees HOA. And there are some up here that are $170 a month.
Right. So I think you brought up, you kind of went over it briefly, but I want to pinpoint it of something that you said on there is the best solution to this, folks, is to actually get pre-approved.
Yep.
right? Because in going through getting pre-approved, not only will you be able to see the numbers as far as what fits your budget, because that's what we're talking about here. Can you actually afford that home, right?
Yeah.
So can you afford it based on your budget and the pre-approval? Look at the numbers, as we go in getting pre-approved and see, is there adjustment? Everything that we're talking about is what we will go through in the pre-approval as far as in the area that you're looking in, right? Is there a mud tax? Is there going to be, flood insurance have to be added onto it? All these different factors so that you can see the real numbers, not numbers in a mortgage calculator on a website.
And one thing that I will tell you guys on that also is just because your debt to income ratio looks good doesn't mean that your cash flow in your own account through your budget is the same. So, we can probably get people approved, but that doesn't mean that we know all of your budget of things that aren't showing up or out there. And we're trying to, debt to income ratios go up to 50% on your gross income. I mean, heck, right now I've got taxes coming out of around 35% on my paychecks, just so that way I don't owe the IRS at the end of the year. But that takes a lot of my income away too. So a lot of these things people don't think about, and that's where the actual affordability, don't think of it from your gross pay standpoint. Think about what your bring home is and what's going to be coming out of that.
Mm-hmm.
That is one of the big things I think people miss when they find out, can we actually afford this house?
Well, let's jump to the second scenario, right? I love this one. It is the HGTV dream house, right? That scenario where a buyer gets pre-approved for, let's say, $450,000, right?
Okay.
$450,000. They immediately go out, start looking at homes, and they find the perfect home. It just hits all the check boxes. The wife, of course, falls in love with it. As soon as that happens, sorry guys, it's over. But the price tag on that one is $490,000.
Oof.
Now, can we afford that home?
That one's a little harder, right? Because what are the reality things that hit from that standpoint, in your opinion, Joe? If you got pre-approved for 450, real estate agents, I love you guys, but sometimes you think of, oh, well, you want this, so let's look at this. And that's where we get to that 490 mark.
Mm-hmm.
So what are some of the reality hits that you think of that they need to put in their mind before they go thinking that they're going to do $40,000 more than their pre-approval?
So I know both you and I, when we go through doing a pre-approval, we look at, really their budget, what you can afford and stuff, right? Is this in the budget? Because if you're approved for $450,000, grand, your debt to income ratio may allow you to go up to $500,000.
Yep.
But is that in your budget, right? Because we don't want you to have to be eating ramen noodles for dinner just to be able to have this home.
Or we don't want you to not be able to take that vacation to build memories with your family.
Mm-hmm. Especially if your daughter is going to college. you need to build those memories, right?
Need to build those memories. So these are all things that people don't think about when it comes to, oh, I'm pre-approved for this. We've already, worked with you on the budget, made sure that payment was going to be there based on taxes and everything else. Now you're putting it into a different way of doing it. I love Hillary. You got to see that comment real quick. But I love ramen noodles. Ramen noodles are good when you don't have to eat them only because you can't afford anything else.
When you're a college student, they're good.
Yes.
Okay.
Yes.
That's when they're good.
But it's those little things that we don't think about. Or like you talked about on Coffee Talk, blowout on the tire.
Yeah.
That's, $100 to $200 that you have to go and you have to get a new tire. Those things can start hurting too. So it's things like that you see those dream homes, you see house hunters, you see the renovation ones, and we're not even going to go down the renovation loan ones that they're talking about at this show. But all of those things, everybody sees this and they make reality look perfect.
Wow.
And it's not.
Yeah. Well, and as well, what if that home comes with a pool?
Mm.
I mean, Joe, I mean, how much did you spend every year on the maintenance of that pool?
Well, so we actually had a really good pool company
Okay.
that did all the chemicals and everything else, but it was $220 a month for them to come out and do that and everything else. So there's,
There's over 2,500 right there,
yep. And
right?
that didn't include the filter cleanout. That was another $300 twice a year. So it all does add up.
Yeah.
You're looking at 3,600. That's $300 a month.
So should buyers actually shop above their pre-approval amount?
I do not think anybody should shop above. They should say, okay, this is where my budget is. This is my top.
Mm-hmm.
What can I find a little bit less so that way I can put more away? I can have the slush fund for that rainy day.
Right.
My kid needs a surgery, and now all of a sudden my copay's $5,000 because we all know health insurance and car insurance. Don't get me started.
Yeah, we're going down a wrong path. Right
we're gonna go on to the next one that I really want to talk about.
Okay.
Because this one brings it into our reality. Because TV, we all think it's reality. It's not.
Mm-hmm.
But now this brings us into our reality, Joe. Tell me a little bit about those love at first sight. I'm walking into this open house.
Yes.
But I haven't talked to anybody to see what payments might be.
So in this scenario, for our listeners, just to lay the groundwork here, let's say that a husband and wife, they're, maybe on a Sunday or whatever, they're driving home from church, and they see an open house sign. Oh, honey, let's go take a look at that. They go and walk in. Not that they were looking to buy a home, right? Nope. Just something. I mean, that's a nice looking home. Let's see what the inside looks like. They go in and they fall in love with it, right? It has everything. The counters. The wife just loves the counters in the kitchen, right? And of course, the husband loves, the big garage. I mean, all these different things. And they just fall in love with it, right? And I mean, after spending hour there and talking with the realtor, they want to put an offer in. And they're convinced that they can put an offer in.
Yep.
Then reality hits, right?
That is the one that I think is the hardest for people to understand.
It's emotional.
You're in these neighborhoods, even if you own a house, you see that bigger house down the street that has the pool, because you and your spouse have been talking about putting in a pool for the kids, whatever it might be. You could just go and look at it.
Mm-hmm.
What do we call those? Looky-loos.
Looky-loos.
That's kind of the terminology when you go to an open house and you're really not even looking to put in an offer, but then you fall in love with it, like you're saying, Joe. That is one of the ones that's the hardest, because you don't know on that purchase price what that payment truly is, because you know what your payment is when you bought that house.
Mm-hmm.
Well, when you bought that house, it was probably $500,000, and now that same neighborhood is $700,000.
Right.
If you bought it 5 years ago, 6 years ago, something like that.
And interest rates are different.
And interest rates are a lot different. Your interest rate's at 3%, but that doesn't mean stop looking because you have a low interest rate. Let me make sure I say that again. Do not stop looking. Just get pre-approved and understand what the new payment's going to be before you go to that open house, before you walk in with your spouse. Husbands are just as bad as wives, because we look at it and when I see a big old shop, I see an acre of land. I'm like, oh, that's exactly what I want.
Exactly.
So I think the open house one is difficult, because a lot of times you don't have lenders at open houses. You have real estate agents there that are showing homes. They're talking about all the great things about the house,
mm-hmm.
but they're not going to sit there and try to tell you about the payment. So again, if you're really thinking that you want to upgrade, you want to do different things, you need to know, where is your credit score? Mm-hmm. What things can I do to improve that credit score possibly before I go look at it? Joe, what's something that you think that they need to think about, if they haven't talked to a lender before they just walk into an open house?
Does the payment match our budget? Right? That's what it's really going to come down to. I mean, yes, it is in qualifying, definitely. And maybe they just went self-employed 6 months ago, right? Change jobs.
Yep.
That's going to be a big red flag, right? Maybe their debt to income ratio isn't where it needs to be. Their credit score dropped because they didn't see that their Parent Plus loan, flipped and needed to start being paid, right? And so their credit score plummeted. I mean,
Or
there's
your car is 6-7 years old and you're now at 150,000 miles and you're trying to figure out, do I need a new car? Because car payments are more expensive too.
Absolutely. Yes.
So all these things, a good loan originator like Joe, and you can get both of us on that one, but a good loan originator they're going to start thinking of those things. They're going to talk to you about that. And if they're not, then they're probably also living on a non-budget kind of mentality. And that's where we all get into trouble. I've done it. I'm not going to lie. I've done it. I've had the money coming in and I bought homes and stuff like that. But we've got to think differently for our clients because of our life lessons in a lot of ways. But at the end of the day, it's still your option on what you want to do. We just have to try to get you qualified for that. So I really love talking with the open house. I like working open houses. I work them with with a couple of agents up in Nebraska.
Same here. Yep.
Because I get to talk to people about, have you even talked to a lender yet? And when they say they haven't, I don't sit there and try to drill them on all these questions, but I talk to them about, taxes. I talk to them about where their payments are today, just so that way they know about, on a high end where that payment might be. And I even have a flyer usually that has that information. It's a good way to try to help people understand it.
Yeah.
So if you are a real estate agent working an open house, do me a favor, reach out to your loan partner. And if you don't have a loan partner, Joe and I are always looking for an opportunity to talk about possibly doing business together. Joe, little plug on the opportunity script there.
I noticed that. I caught it.
But we're always
be proud
to talk about partnering up. We will supply flyers based on what the purchase price is with a 5%, with a 3%, a 3.5 FHA, VA. We'll give something that'll give you some things for you to have at your open house
as discussion points, right? Because those numbers are a great lead in to, does that fit your budget?
Yep.
Which is really what we're talking about here today is, can you afford that home?
Very true. And, if you can afford it, great. But if you don't know, here's our email addresses. We would love to connect. We'd love to help you guys understand it. So reach out to us. That is one of the big things is know your plan, know your budget, work with a professional.
That way you can fall in love with the plan before you fall in love with the house, right? Getting pre-approved first, it can save you so much time, frustration, and heartbreak. I know we're running out of time, Joe. So those are listening, if there's something to take away from today, it's buying a home shouldn't be stressful. The more prepared you are up front, the smoother the process becomes. The good news is, though, that most of these can be avoided with really just a little planning that we're talking about here and the right team around you, like Joe and I. So if you'd like additional information on homes in your area, reach out to us. Joe's going to pop up the email address there and reach out to us. Next week, folks, we're actually going to take a break because my wingman here at Cup of Joe is going to be out of town. So join us in 2 weeks as we tackle a challenge that stops many, many home buyers in their tracks. You find the perfect home, kind of like what we're talking about today, but your current house isn't even on the market yet. And you need the equity from the sale of that home in order to buy the next one. Are you stuck? Well, we will actually be joined by Diane Hibbs with eXp Realty. She's been on the show before. We're going to have her back on. She's going to share 2 real client stories and the creative solutions that she put together to help these buyers move forward when they thought that they had no options. So tune in 2 weeks from 2 weeks from now at our usual time, Wednesday, 9 a.m. Central. Even better yet, of course, go to our YouTube channel at the Mojo Show Real Estate Podcast. Hit that subscribe button so that you don't miss an episode. Because after all, we are trying to get to 1,000 subscribers, and every like, share, comment helps us reach more homeowners like you. Before we close things out, Joe, any last words or nuggets of advice for our listeners?
Get with a good partnership when you're looking at homes. Before you even go look at them, make sure you're already talking with your real estate agent and your lender, because those are two things that you need to make sure are done before you go and even look at that property, in my opinion. And if you see something online, great. Don't go and ask a real estate agent to show it to you before you actually get pre-approved.
Absolutely. Get pre-approved first. Very good. Well, that handsome guy there with the beard is Cup of Joe Mortgage, and we will see you next week. 2 weeks.